From our perspective, back in late January, we downgraded our near-term equity outlook to neutral. And part of this happened before the coronavirus. Already we had stocks at a cycle high. We saw a sentiment that was stretched. And we've gone over 6 months without a normal correction. You layer on the coronavirus, which provides more uncertainty. And we think the risk-reward near-term remains mixed on it. So from our perspective, what does that mean? That means maybe bringing equity allocations that have run up quite a bit back to targets, maybe a little bit of cash. In some of our more tactical portfolios, late last year, we added a little bit of gold. I just want to say, longer term, we still think the bull market trend is intact. But when you shut down the second largest economy in the world, that's going to have some impact.
Yeah, Kevin, I want to get your thoughts on this as well, because just to put it in perspective, even though we're seeing these 2.5% plus moves in the major averages here in the U.S. right now, we're still only a few percent below those record highs that were reached earlier in the month.
Yeah, so there's a lot of good things going on beyond the immediate news, and that is the improvement in tone in terms of the overall global economy. There was a lot of pump priming from central banks over the last year or so. There has been a drawdown in inventories around the world, and that could lead to a more sustained pickup this year. Unfortunately, right at the moment where you would be looking for that pickup to start to get some real lift, we've been hit with this coronavirus, which does have some real impacts. There are very significant supply chains in China, and when you look at the IHS market services survey from last week, it was a very large drop here in the United States. So we're weighing the bigger picture, which is one that is, we think, going to move towards a improved economy later this year. But we have the near-term challenge and uncertainty surrounding coronavirus and the spread of that virus, which has significant impacts as we see today in the near term.
Keith, I want your thoughts on coronavirus concerns running into the political cycle. I mean, in 8 days, we'll have Super Tuesday. 2 weeks after that, we're going to get Michigan, Florida, Ohio, Missouri, Illinois, or at least we'll have results from all of those important states. At what point does the medium term become really uncertain, because we're not sure what kind of other dynamics will develop as we get more information about COVID-19, the coronavirus?
Yeah, good question. Well, we always work in an area of uncertainty. It's the degree and what's priced into the market. I think you bring up a really valid point. The election side right now, I think the market's perception, not from a political view, just a market perception, is that Trump is very likely to get reelected. As we move towards knowing who the Democratic nomination is, I think that thesis will be tested as far as if it's going to be Sanders or someone else. And that will inject volatility in the market and probably periods of pullbacks, which we think eventually will be an opportunity. But again, if you look at the S&P today, we're still trading above where we were December 31st. Valuations still haven't corrected that much. Sentiment is just starting to correct right now. So we would look for a deeper pullback, sentiment getting more extreme before we think it's time to step in. And maybe the political side will help that. But so far right now, we still think we're kind of in a more mixed near-term risk-reward situation.
Kevin, dramatic moves in equities today, but also dramatic moves again in treasuries. You got the 10-year breaking well below 1.4%. It's at 1.368 right now. The 30-year treasury yields, record low, 1.82.
Yes.
How much lower can rates go right now? And I guess overall, what is the bond market signaling?
Yeah, we just wrote about this at Washington Crossing Advisors, and that is a sign that you've got pressure around the world more recently as it relates to this global slowdown, and it's being manifest in lower yields. The very significant number that you just cited was that record low is at the longest end of the Treasury curve. So 30 years out, the yield below 190, I think, at the last time I looked at it, is significant because it has also accompanied a reinversion of the yield curve in the earlier parts of the curve. So if you look at a 3-month, 10-year spread, for example, that has reinverted, and many people look at that as a harbinger of a potential recession. So it doesn't mean that necessarily a recession must happen, but the flattening and inversion of the curve, again, is something that is going to be an arrow in the quiver of the bears who want to push back against the more bullish thesis as we go through the year.
Keith, I want to go back to what you were talking about with politics. right now, some would argue that the market's interpreting Bernie Sanders' strength as resulting in a likely Trump win. I imagine that if somebody like Bloomberg were to really gain and sustain any kind of strength, the market might not have as much of a problem with that either. So what do you see as being the potential potholes or dangers or things that could develop in the Democratic primary side that would give the market pause, whether it's a sense that Sanders' popularity is growing stronger among moderates or something else?
Well, I think
is that
you hit it
question
on the
for
head.
me?
As you've seen Bernie Sanders' nomination on predicted go up, Trump's reelection prediction odds have also gone up, rightly or wrongly. That's what the prediction markets are saying. I think what could go wrong is, again, that at some point you will see a shift saying, let's say on the Democratic side is starting to gain votes or look more likely of gaining into the White House, and then also about Congress as a whole. So I just think, we're not at a 60-40 country. We're closer to a 51-49. And the confidence in the re-election from Trump is going to be tested, in our view, again, not from a political standpoint, from a market standpoint. So that's one of the things that as we get closer and we get past March, you're going to see that really move the headlines from day to day.